I want to ask you something. How much did you pay in brokerage commissions last year? Most people have no idea. They just click buy, click sell, never even think about it. But those fees, they compound against you just as quickly as returns compound for you. Today, I invited a dealing manager from Phillip Securities to this podcast. Someone who watches retail investors trade every single day. We're going to talk about what is actually happening in the US markets, whether now is a good time to enter the markets, and honestly, whether you are paying more than you should to invest. Stay with me. All right, today in this session, we have Richard, who is a dealing manager with Phillip. Richard, welcome to this studio. And could you give a quick introduction to our guests and viewers about yourself? Like, how do you actually end up doing this for a living?
Hi, everybody. I'm Richard, dealing manager from Phillip Securities. In the past, when I was still schooling, me and a couple of friends end up interested in stock investing, open brokerage account, had the chance to do group discussion. And then I was also thinking, before my graduation, what jobs allows me to look at the market legitimately at work, talk about the market, and then, dealing job is there for me. Right, so that's how I end up doing this for a living till now.
Okay, but have you been with Phillip all this?
I've been with it for more than 10 years.
10 years. Oh, yeah. That's a very long time. Okay, so today's discussion is really about the US markets. And because I think US markets is one of the more popular markets among the younger investors. And I think that in my channel, I always talk about US market, but I'm not really the real finance professional, which is why I've invited Richard with me here. And this year, 2026, has been quite an interesting year compared to the past, because there's so many different events that happen even in the first half of the year, right? Like we have geopolitical events, we have Straits of Hormuz closing, we have all the interest rates risks and all that. So, Richard, can you guide us through like all these investor sentiments, right? What is the general sentiment of investors right now? Are we in a greed or fear kind of zone? And how are regular Singaporean investors actually reacting to all this based on your current experience?
Okay, so in Phillip, our dealing team is very on the ground. We get to meet client in person. We talk to clients over the phone, right, email. So we have a pretty good sense on the ground how investors are feeling. In general, investor optimism is high. In this environment, the US has been rallying hard, mainly driven by AI as a catalyst. If you ask whether there's any fear, it's more like fear of missing out currently, because most investors are looking for opportunities.
Yes.
Like what Chris mentioned earlier, all the wall of worries, inflation expectation, rate hike trajectory is changed to a higher trajectory, etc. People are just waiting for a correction, hopefully a good correction for them to enter. But at the same time, it's good to practice cautiousness, right? It's good that client go in tranches, not all in, because I think nobody can predict the top. Like when the market is down, nobody can catch the bottom. And now most of the investors will rather miss out the opportunities if they just sit on the sideline.
Yeah, now that is interesting, right? Because we all know that market is now very near to all-time highs and keep getting new all-time highs. And at the same time, it is like a very frustrated rally because there are a lot of cash, people with large amounts of cash sitting in the sidelines. And at the same time, they are not participating in this rally. And every day they keep seeing the markets go all-time high. So my general sentiment of these investors is that they keep saying, okay, the crash is going to come, the correction is going to come. It's like the most hated rally, you know. This is my general sentiment. I'm not sure if your customers or clients are feeling it. So what do you think about this?
Having met and speak to different groups, different background of clients, most of them actually are not in the finance field. There are some who meet are very serious investors. They do their homework. They learn about the compounding effect of the market over a long-term period. So let's say as a framework, in today's interest rate environment, if we regular Singaporeans look at our regular products from the banks, like the fixed D, from the government, the 6-month treasury bills, the Singapore savings bonds, you probably looking at 1.5, 2+%.
Yeah, right.
Currently, this is what is available if you want a safe option. Now, over the long term, if you do some Google search for the market, over the long term, let's give a ballpark. Let's say the S&P index over a long term, expected return maybe about close to 10% ballpark. Now, looking at that, of course, we know it is not free because there's always corrections.
Yes.
Yeah, we had the recent the COVID-induced corrections. We look a bit back. We have the GFCs 2007, the Great Financial Crisis. We had the dot-com bubble, but the market actually tumbles down significantly. But over the long term, if you have that runway, time in the market is what will help you to plan to capture this kind of returns in the long term. So investors are wanting to get the market despite markets going all-time high, so long as the trend can hold.
But are we seeing like more people staying on the sidelines waiting for a crash? Or, are they like prefer to all in and don't miss out on the rally?
Okay, so now there's definitely different groups of clients. Nobody is wrong. Okay, those are on the more cautious side. They are also concerned, especially if probably they have lived through the past big corrections. They know every time things seems to be, hey, this time is different.
Yeah,
it's keep going up. This time is different, but there will come a time whereby the top happens. Nobody knows where. If they are being too cautious and the market keep trending in this same direction, then they will miss out the boat. Right. So for those who go all in, it is not really advisable because, like I mentioned, when nobody knows the top. Right. We follow the trend. I think that is a good guideline. When there is a bit of correction, for them to go in the small tranches, so that they are invested and they are not overly anxious about their investment because they know that they are not all in. They always have dry powder to go in further when there is a good price level.
Okay, that's a good point because I want to challenge that, right? Because there's another point of view which says that if you hold too much cash, there's a cash trap, right? So how would you defend that? Because dry powder versus, cash drag, you are sacrificing a portion of your returns because you're out of the market. And in a way, you're kind of timing the market because you believe that the correction or the crash is coming. So how would you react to this kind of thing?
Yeah, okay. How about this? That means asset diversifications, right? So some clients, they want to be invested, but they know they don't want to be 100% invested with their liquid cash, right? They also want some to be in safe, some to be really liquid cash. They can choose to put in the safer instruments. Example, the Singapore Savings Bond, it allows you to do monthly redemption on a monthly basis. If there's not liquid enough, one of the best product we have currently in POEMS is a money market fund called SmartPark.
Yeah, SmartPark.
SmartPark, right? It's seamless. What clients do, they just simply online opt-in. And whenever they do a deposit or do a withdrawal or do a trade or do a sell, this redemption is auto, seamless to them. They don't have to do anything about the MMF. And then what it does in the meanwhile, while they're waiting for opportunities, they are actually earning MMF return. With the trading in US market, most probably they will park in US dollar, right? And then they will earn a current return is approximately slightly over 3% for US dollar in the money market fund.
Nice. Okay. So as we are on the topic of FX spread and cost, right? I recently done a transaction to buy US stock on POEMS platform. And then I noticed that it is quite a good FX spread. I think to be exact, it's around 0.32. So I see the FX spread is around 0.3 to 0.4. Is that what POEMS is currently charging right now?
Yeah, Chris, thanks for bringing that up because in the past, for POEMS online FX conversion, it is not a live conversion. Fast forward to today, the spread has tightened to what it is now, and it's on a live conversion basis. In fact, it refreshes every minute to give you the live rates. Yeah, so definitely you're getting a very competitive rates compared to some other platforms.
Yeah, in fact, for traditional bank brokers, when I last used them like many years ago, they are charging like 0.6, 0.7. That is traditional brokers. We are not talking about discount brokerages. I think discount brokerages are around 0.3 to 0.4 as well. So I would say POEMS is quite within the market range. Right. Yeah. And I think another point to note is that recently they introduced 0 US commissions, which is like the big header news, right? Yeah, Richard, brief us on that. What has changed and how is it going to benefit us as investors?
Okay, over this years, right, we noticed that more and more investors are putting their investments in US markets compared to years back when Singapore market is always the first market that investors look at. Today, it is still very popular with our own local markets, but some investors, they come in, the first market they go look for is US market. So we know investors' needs, requirements have evolved. So Philip want to cater. Philip being deep-rooted in Singapore, we are around since 1975, here for 51 years. We want to cater as best as we can to our local Singaporeans, right? In fact, we are the first brokerage to introduce online stocks trading in 1996 via the online platform Poyums. And that is to empower investors to make decisions through online investings. So today, we bring in this True Zero for investors who are trading in US market through our Cash Plus account. What it means is that we charge investors zero commission, zero platform fees, and zero settlement fees. And this True Zero also is meant to bring out that we are not just using platform and costs. We are providing our clients with full access to our platform trading tools, as well as our physical 9 Phillip investor centers that our clients can access to. Clients can talk to our staff, can meet in person. So it's like a full service zero com. That is what we call a True Zero.
Yeah, that's nice because I know that when I recommend Poyon's platform to my viewers, ask them to sign up, maybe they get some like trading vouchers, correct? And most of these trading vouchers, they require you to trade US stocks. And in the past, either you do the US trading commission, right? It's like $3.88. And then even if you do fractional shares, the minimum is 0.88 cents, right?
Yes.
So with the zero commissions now, you can fully utilize that trading voucher with zero cost. And I already tried it. It's really zero. There's no like hidden fees, settlement fees and all that. It's really to help people, to encourage them to trade and invest. So I found that feature quite good lah. If you haven't signed up for Boyum's account and want to get all these trading vouchers, this is your sign right now to click on this link or scan this QR code here to get your Boyum's account today. But really, when we think about all these zero comms, is it really so good or not? Like, what does Boyum's earn if they really take zero commission, zero platform fees and all that? Because this is not the first time I've gotten this question. I've been sharing about Boyum's platform for many years, and then people are really, skeptical. Really zero meh? They earn from other places, right? Yeah. Richard, what do you have to say about this?
Yeah, okay. So True Zero for US market is what we have learned from investors, the change in investors' investment habits. And this is truly to cater to investors. A lot of investors are actually pretty new to the US market. So by introducing the True Zero, we enable them to do portfolio diversification, to do rebalancing with less friction, because they don't have to worry about the costs.
Yeah.
Right. We do have a lot of other products because as we are already since 1975, we have a range of products other than US market. So when clients have needs, or maybe example, clients are very nimble and they have experience and they are confident in identifying trading opportunities, be it in a long bullish market or in a short bearish market, we have other products like contracts for difference. Of course, fees and charges apply. So please read the product info sheet. Yeah, but clients can venture further. As for example, they have already built a base, and then they have want to set up another pot for opportunistic trading. But they can actually venture into something else with that pot of capital. And then for investors who are having even more needs, other products such as unit trust, some like unit trust vehicles, insurance, or in fact, if those clients who are declared they are accredited investor credential with Poyums, they are exposed to even bigger ticket items like corporate OTC bonds. And then they also can go into yield enhancement products like structured products, whereby they can wait for an entry into the market while earning money returns. So we have a wide range of products. So it depends, where do we earn? We do earn, of course, because we need to survive to serve the clients. Yeah, but True Zero is True Zero to cater to this new group of clients who are actually looking into US to diversify the portfolio or first time coming into the market.
Yeah, and in fact, when we talk about zero US commissions, it's not just catered to traders, because you think that it's very vastly passed out. Even for investors, sometimes they may have a sunk cost fallacy. It's like they keep holding this stock. They feel like, it's not worth holding already, but they don't bear because to sell it, because you need to suffer commissions and all that. So now it is less of a concern to them, right? Yeah. And one more thing is that other than zero US commissions, previously I also shared that even for the Singapore stock site or ETF, it is at 0.08, no minimum commissions. In fact, this is one of the most competitive, even if you're investing in cash, CPF or SRS.
So that's for Singapore market, correct. We are here deep-rooted for 51 years. We know Singapore market is here to stay. Yeah, so we also provide less friction for clients, so they don't have that barrier.
Yeah.
Yeah, they can be free and easy to plan how they want to diversify. Singapore market, US market. These are the main markets. Yeah.
Yeah, in fact, that is even for CPF and SRS investing, if that is of interest to you lah, other than cash investing. Okay, so on the zero US commissions, is there really any terms and conditions, or is really just pure zero? Is there any requirements?
Yeah, okay. It's true zero. There is a bit of exception because in the US market today, there is many trading sessions. We are very used to the regular trading hours, like 9:30 to 4:30 a.m. Singapore time. Now, in today's market, there is a pre-US market hours. There is a post-market sessions, and there's also US Asia hours. Now, this true zero applies to pre and post-market as well as the regular market. It doesn't apply to the US Asia market, because client can choose if they want to trade during our regular Singapore hours, like 9 a.m. until 5 p.m. They can trade in our US Asia hours, but because it's an OTC product, so there is a separate cost that applies. You can please check out the cost in the info sheet. There will also be charges for shares that is less than $1. Basically, these are the penny shares. Usually are more speculative in nature. We will caution client in this shares, basically because they are more speculative in nature. But if clients want to do, cost will apply for this penny shares.
Yeah, so in other words, to be safe, if you trade during US normal market open hours and you buy shares above $1, you'll get zero commission.
That's
Other than that, other charges will apply lah. Okay, so let's move on to the more exciting questions, like how to actually build wealth through US investing, because I am a big US investor. I invest mainly in US markets and even global markets, right? And some of my audience, they are in their late 20s or in their 30s, they are starting to look at investment very seriously. And they have some savings. Maybe they miss out some of their early investment years. And they know they should be investing, but they are just waiting for the right moment to invest, holding cash, not sure when to start. Correct. So the most basic question is ETFs versus individual stocks. How should one start investing in the US market specifically? Because for Singapore, maybe we have a lot of individual stocks, very little ETF, but US there's so many ETFs. And so how should one look at it from a beginner's perspective?
The most investors started off typically with the S&P 500 ETF. Typically, they use is SPY SPY or VOO. They are given more exposure to tech sectors, AI-driven momentum. Also go for this QQQ, which is an ETF for NASDAQ 100 companies. If they are coming in to the US market as a beginner, the ETF will help them not to put all their eggs in one basket,
Right.
As in to identify one stock, because they are new. By going using an ETF, the best is they can go in tranches. As they go in, I'm sure they have the time to learn, and they can learn more about stocks investing. They can pick up on specific counters that really they see a long-term prospect. Maybe can go in tranches so that they can learn while they invest.
Right? I think another popular question is because maybe beginners, they see a US market is so high already. Can I still enter or not? Is there still opportunity to go even higher than the current all-time high? What's the opportunity right now?
Okay, as we mentioned at the start, nobody knows the top. Like nobody will know the bottom when there is a huge correction, and people usually will miss out the boat if they are just aiming for the top. And we have mentioned earlier, in the current interest rate environment, if you are not putting a time in the market, then what you will be left of the market will be interest rates products like the fixed D, Singapore government treasury bills, savings bonds, 1-2% with the inflation. I believe we feel that it is like higher than that. Yeah, your money will be eroded over time.
In other words, opportunity cost.
Opportunity cost to what is out of the market.
Right.
So is it a good time? It is already a risk if you are not putting your time in the market.
Right.
When you put your time in the market, of course there's risk. So the cautious thing will be to place your investment into the market.
I agree, man, because it's always like, would you really want to be safe in your cash and your low risk assets? That's another form of risk that you may not be aware. But if you are investing, you are taking on market risk. So there's always risk everywhere. It's just that which part of the risk that you choose your side to be on. That's my perspective. Okay, Richard, I have a very interesting question because you deal with clients every day, ma. I
Yes.
don't, ma. So, based on your interaction with your clients, right? What do you think separates a good long-term investor versus someone who is just trying to dabble in the market, looking for some quick gains, but in the end they just give up? Like, what is the difference or the habits or characteristics of such people?
Okay, I incidentally I have this opportunity. I will share it anonymously anyway. Just 2 days back, me and one of my teammates from my daily team met up with a client. I'm actually humbled by his generous sharing of his investment journey. Well, he started off as trade and dabble. That was maybe more than 10 years ago when he started investing and trading. Well, he said he made profit and loss, but he learned and he's serious. He's not an investment field professional. He's not, okay. So he's serious in learning about the market. So what he does is he actually learn, research and convince himself the market return over the long term. And he's convinced enough and he do it consistently.
Right.
Over, I don't know, the past decade or so. Today, when look at his portfolio and learning from his learning journey, his portfolio is doing really well. Of course, there's always risk. When we speak to client, that's why we also bring in other products. Maybe if there is a need to do a bit of de-risk, if they happens to be an accredited investor status, so we could actually introduce yield enhancement product, like structured product for him to want to wait with a certain price. Should there be a correction while earning some money return along the way, and that allows him to decide how he want to diversify across more sectors.
That is an example of a good investor long term.
Yes, correct.
How about
correct.
an example of a not so good investor?
Okay, so there's another grouping, generalized grouping will be investors who really wait, overweight,
waiting.
they keep waiting, overweight out the market most of the time. And by the time he get too anxious to want to get in, he may just wrongfully again the wrong time.
Yeah.
Because he overweight, right? And then the FOMO sets in, etc. Second group will be those who doesn't have they're not convinced themselves of the market long term, and then they just dabble in and out without a clear clarity of what they want. Yeah, without seriousness and focus in monitoring and consistency in investment, and then consistency in the rebalancing. So that is where the True Zero helps for clients who are serious in doing their homework and then want to grow long term. So we take off friction for clients to do that.
Yeah, I think that's interesting because I feel that there are investors who they really want to participate in the market returns, but they really don't know what they want. Like they want this, they want that, and they end up picking like so many different basket of stocks that could have been an ETF itself. I think when I was younger, I made the same mistake. So I reflected. I think it's very common among younger investors because they keep looking at this individual stock or this particular sector theme or keep making like outsized returns. In more recently, there's memory, there's AI, or even a few months ago, it was oil and then gold and silver and all that. Keep jumping all over the place. So I would say that that is a weakness of a weak investor. You do not know what you want and you end up picking all along the place and yeah, you don't have clarity in what you want to do. So is that a fair assessment of how a poor investor will perform?
Yes. Because this clarity also comes with discipline. And once you start doing with discipline and with seriousness in wanting to learn and usually reflect on the investment over time and then monitor your investment and understand and make changes, you definitely will understand yourself better.
Okay, now it's a quick fire question, and I think this question quite challenging. Why?
Yeah.
Because there are so many brokerages, even discount brokerages in Singapore. Yeah, we're talking about the likes of all these we call them animal brokers because they are represented by animal icons. So what makes Phillip Securities or Phillip Capital or even Poem stand out against all these competitors that are increasingly more and more fighting for the same customer, the same investment space, and a limited pool of Singaporeans wanting to invest? What makes Phillip Capital stand out?
Okay. Investors who know us as a true deep-rooted company in Singapore started in 1975, as we mentioned. We are the first to bring online trading to empower investors, retail investors in Singapore. Phillip also hold actually the largest market share in among retail investors in Singapore. Now we level the playing field with this new fintech brokers and level the playing field in terms of the cost, so that client have another reason, right? So stick with us, and then at the same time, through Zero, like I mentioned, we don't take away other things that is pre-existing. So our support, be it the branch, being the dealing teams, are still here to support the clients. Yeah, so it's a true full service brokerage with true zero for clients. So I think that's where we stand out because the trust has been built over time. For competitors, we have seen over time that some come and go. Yeah, so we have been staying all the while. So the stability and the trust is always there.
Yeah, that's interesting because when I was young, there was a Phillip Capital branch near me, and then I've been looking at it grow, and it's still there, you know.
Okay.
All the shops nearby all changed already. The branch is still there. So that one is fascinating because Phillip Securities, they originally was physical, then they moved to online.
Yeah.
Whereas other fintech brokers, you realize, they started online, then they are starting to build physical presence because they realize, actually this is very important as well. And I think this is one of Phillip Securities' edge, right? There is a human touch read. You can speak to a relationship manager or dealing manager to really understand your investments. So, Richard, thank you. I think this is really good, right? But I think my closing question for this is that if you go back to your younger self, maybe 10, 20, or even 30 years ago, before you even started being a dealing manager with Phillip, you are starting your investment journey. What is one piece of important advice that you would tell yourself so that you would not make the same mistake again, or you can help others avoid that mistake?
So when I was younger, I think I fall into the group whereby I just dabble and trade. The client that we just met 2 days back bring that lesson to me once again. Yeah, that I should have started earlier. The earlier you start, actually, you have a much longer runway, and it really helps you to actualize, that true long-term market return that is actually in the market. You can see it. You can just study the market, and it is there, right? So you have a long runway, and you do it consistently, and you be serious in your investment. That would be what I would want me, myself, younger self to be.
Nice.
Yeah.
Okay, so let's say if everyone forget whatever we just said in this video, and we only have 3 points to talk about to summarize what we have just mentioned in this podcast, what would the 3 points, important lessons of this podcast be?
Important lessons of this podcast would be time in the market is important. Okay, if we go with the trend, we should do it in tranche, especially if you're pretty new in a basket. Add on to current environment because the common diversified ETF that clients use like SPY, VOO, QQQ sounds diversified, but into this content, because of the AI-driven rally, the tech, the AI company's component, it makes up a much bigger percentage of the whole basket. So for example, S&P, close to 30 plus 40% is in tech or AI related companies. And it's going to get more with the new $1 trillion IPO that's coming in next year, like the SpaceX. They are probably going to add on more weightage. QQ, SPY, VOO will have that effect. They are just having more weightage. If you think this AI rally is causing a bit of nervousness, there's another one that you could look into, like the RSP. This ticker called RSP is actually an S&P equal weighted ETF.
Yes.
Yeah, so possibly that will give you a real sense that you are really diversified across all the sectors among the 500 companies, because it's 500 companies, 100%, each company will only take 0.2%. Yeah, or we won't have that outsized gain if it's AI driven, but it won't have that outsized tumble if things are correct suddenly. So the second point to take away is POEMs beyond the US markets. POEMs have a wide array of products that we can serve clients along their investment or wealth accumulation journey. Everybody is at different stage. So our products, besides basically stock markets, will include other insurance and wealth management products, like the unit trust and accredited investors products, the higher ticket items like the OTC bonds. We do have clients who want to who still want to have some sense of safety, so they like more stable, that they can get a half yearly, they can get the coupons, or enhancement product like the structured products, right, to help them along the way to de-risk or to wait for a good price to be looking out for. That's my second point. So the last point is just to reiterate. Take advantage of our True Zero to help yourself. Don't wait too long. Get started right away. Not forgetting the money is not idle when you park in the points, right? Straight away you can enjoy the tight FX spread. If you want to trade in the US, you put in Sing dollar. Typically, that's the case. You just do online conversion, and then up in our MMF, you can enjoy 3% currently for the US dollars.
Nice. Thank you, Richard, for coming to the studio.
Thank you.
And yes, if you forget everything, just go and sign up for a Poems account by Phillip Capital. Use my special link here or scan the QR code. Yeah, and we'll see you in the next episode. Thank you.